Welcome to The Explainer. It's pretty wild to think that a single name, just one name, could completely flip the script on the entire crypto market in a matter of hours. Well, that's exactly what we're going to break down today. How one political nomination basically fast-forwarded the future of crypto right into the present.
Everything really hinges on this one quote from a market strategist. He said, "The news may have pulled those Q4 tailwinds forward." So what does that even mean? Well, tailwinds are just the good vibes, the optimism that everyone was hoping for later this year. And this event, it yanked all of that optimism from the future right into today. Let's dig in.
All right, so to really get the sheer impact of this news, we first have to get a feel for the mood of the market right before this all went down. And honestly, everyone was on edge, just kind of holding their breath and waiting. The economy was serving up a seriously mixed cocktail. I mean, on one hand, you had decent growth and unemployment was under control, which, is good. But the elephant in the room was inflation. The Fed's favorite inflation gauge, core PCE, was just stuck at 2.8%, way higher than they wanted. So this put investors in this risk-aware mode. Nobody wanted to make a big move. Because of that inflation number, the thinking across the entire market was pretty simple. The Fed is not going to cut interest rates unless the economy really starts to look weak. The priority was fighting inflation, period. So the market was basically stuck in a stalemate, just waiting for something to give. And then came Thursday, August 7th. This was the day it all happened. It was a day where one rumor sank the market, and then one official announcement sent it absolutely flying.
So check this out. Here's how the day went down. In the morning, rumors start flying that Fed Governor Waller might be the next Fed chair. The market immediately gets nervous. Things start ticking down. But then, at 3:30 in the afternoon, boom, the real news drops. It's not about Waller, it's about a guy named Stephen Miscongian getting nominated for a different empty Fed seat. And the reaction? It was instant. A huge rally across the board, and crypto was right at the front of the charge.
Okay, so this is the million-dollar question, right? This unlocks the whole story. Why did the market get spooked by the name Waller, but absolutely love the name Miran? What is the big deal here? And here is where it gets super interesting. On the surface, both guys are considered dovish. They both generally favor lower interest rates. But, and this is a huge but, the market sees them as polar opposites. Waller, he's seen as the independent guy, the one who just follows the hard data. Miran, on the other hand, is seen as a total White House insider, someone very closely tied to the administration's political agenda. For the market, that perceived difference in independence meant absolutely everything. So let's really dig into this. Why was Miran's name such a powerful spark, especially for a market like crypto? What does he bring to the table that Waller doesn't?
Well, Miran is famous for being a huge champion of something called a weak dollar policy. The basic idea is that if the US dollar is too strong, the government should step in and actively push its value down. Why? To make American products cheaper for the rest of the world to buy, which could help fix trade problems.
And his plan for doing this? It is not subtle at all. It's a full-on, four-step playbook. You'd have the Fed cutting rates, teaming up with the Treasury to literally print more money, and then using all those new dollars to buy up foreign currencies. This isn't just hoping the dollar gets weaker, this is actively forcing its value down. And that, right there, is the heart of it. The market didn't just see this as a guy who likes low rates. They saw this nomination as a signpost for the future, a future where the Federal Reserve might not be so independent anymore, but could act more like an arm of the White House's economic policy.
Now, this wasn't just some abstract theory people were debating. The proof was right there in the market's reaction. Crypto, of all things, just exploded, and it gave us all the evidence we needed to see this new outlook take hold in real time.
First thing, just look at what happened to the US dollar index, the DXY. The second that announcement hit, it took a nosedive. And for assets like Bitcoin that are priced in dollars, a weaker dollar is always a bullish sign. It just means it takes more of those weaker dollars to buy one Bitcoin. Simple as that. Investors didn't wait around. A whopping $200 million plus flooded into spot Bitcoin and Ethereum ETFs in a single day. We hadn't seen that kind of cash rushing in for over a week. It was a massive signal that big money was jumping back in. And it didn't stop there. The bullish signals were flashing green all over the place. The Coinbase premium shot up. That's basically proof that people in the US were buying like crazy. The options skew turned positive, which just means traders were betting way more on prices going up than down. Other nerdy metrics like MNAV multiples expanded for the first time in weeks. And get this, the amount of dry powder, cash waiting on the sidelines for Ethereum plays, swelled to almost $4 billion. Every indicator, flipped bullish.
So what do you do if you're a professional strategist and the entire game board just got redrawn overnight? Well, let's look at the consequences for a real-world investment portfolio.
The strategist behind this report put it perfectly. He basically said, look, we almost never make quick changes like this. It's not our style. But this event was so huge, the risk-to-reward calculation has completely shifted and we have to act now.
And here's exactly what they did. They actually trimmed their big position in Bitcoin and rotated that money straight into Ethereum, making ETH their new top bet. They also added some smaller positions in things related to Ethereum like ARO and even a crypto equity fund. The thinking was crystal clear. Pivot to the parts of the crypto world that stand to gain the most from a Fed that's getting more political and a dollar that's getting weaker.
And that's really the heart of this whole story. It's a perfect example of how one single political appointment can literally pull an entire market's hopes and fears for the future right into the here and now, forcing even the most disciplined pros to rip up their playbooks and adapt on the fly.
So this leaves us with a pretty massive question, doesn't it? As that traditional line between politics and the Fed's monetary policy starts to get blurry, are we watching the very beginning of a brand new era for crypto and its place in the world? It's a story we are definitely going to keep watching.